Fixed income government securities fared very well today as investors sought safe haven for their money in issues like the 30-year Treasury bond, which had its biggest one-day rise since May 26 of this year. But corporate and municipal bonds moved sharply lower. But let's look at that long Treasury, a winner for today. A nice gain of 1 and 9/32. The GMAC corporates are, however, down 2.5 points. But the Shearson Lehman Long Treasury Bond Index up 22.14. Investors buying safe issues. And the municipal market down 1 3/4 on these Jacksonvilles, down at 75.25 bid, and Fed funds at 7 5/8%. Finally, closing at 7 5/8. Now, because of the nature of what happened in the stock market, let's go immediately on to review the damage. And we see only 42 advancing issues today at the close, 1,965. All this combines, of course, very nicely with that 508-point loss in the Dow. And still, as I say, no new highs yet available or lows. Topping the active list on 12.6 million shares, Pacific Corp tumbling 4.5. Cincinnati Gas and Electric off 2 1/8. American Telephone reported flat third-quarter earnings, 47 versus 48 cents last year. Stock down 6.5. General Electric tumbling 9 1/8. Exxon off 8 1/2 points to 35. IBM tumbling 31 1/4 points to 103 1/4. Ford down 15 1/4. American Express, a Dow stock off 9 5/8. Santa Fe Southern Pacific and the Dow Transport's down 9 1/2. And 10th in volume, Gillette tumbling 9 points down to 24. Among widely held issues, AMR, parent company of American Airlines, down 9 3/8. Bethlehem Steel plunged 5 1/2. Caterpillar Tractor down 14 1/4 points. The company reported a tremendous third-quarter turnaround, $1.47 in earnings versus a loss of 26 cents last year. Digital Equipment plunging 42 1/4 points. Kodak down 26. Merck off 33. Polaroid off 8 1/4. The only two decent percentage gainers, Newmont Gold and Callahan Mining, the precious metal stocks, as I mentioned earlier, the only ones to rise today. Harcourt Brace Jovanovich down 3 3/8, the biggest percentage loser. USX tumbling 13 points. GAF off 18 points. Came as no surprise that Samuel Heyman and his investment group is now reconsidering the $66.50 a share buyout bid on GAF. Avon Products, that huge percentage loss of 11 5/8. Over in the American Exchange, a record drop of 41 points in the index trading volume at 35.4 million shares, a record on the curb, and only 23 advancers, nearly 950 losers. Topping the active list, Echo Bay Mines down 2 points, even though it's a gold stock. Very strange performance. Home Shopping Net down 1 1/2. Texas Air plunging 4 1/4. Wang B off 4 3/4. Although Wang reported 14 cents in earnings for the first fiscal quarter versus a loss of 19 cents last year. Alza down 9 1/4 points. And then America's Trust Amoco following, of course, Amoco stock down. This is the appreciation component, and the same was true of Atlantic Richfield Americas, or ARCO, down 8 3/8. NASDAQ trading, a loss of 46.12, obviously a record. Trading volume was not quite a record on the over-the-counter market, about 223 million shares. Only 137 stocks advanced, 3,573 lower. 100 index off 55 1/4 points, and then a little. Intel topping the active list, plunging 10 points. Apple Computer off 11 3/4. Lynn Broadcasting down 5 3/4. Genentech plunging 12 3/8. Lotus Development, just mindless selling all the way around here, down 6 there. Microsoft off 19 1/2 points despite higher earnings. Sun Microsystems plunged 4 1/2. It's in a deal with IBM. MCI Communications down 1 1/2. It reported higher earnings, 8 cents versus 6 cents in last year's third quarter. Henley Group down 3, and Liz Claiborne plunging 6 1/2 points. Northview Corporation, one of the few big gains anywhere for the day, up 4 1/4. The company's received a $22 a share cash buyout offer from Calmark. Georgia Gulf down 8 1/4. The company reported higher third-quarter earnings, but said probably have lower fourth-quarter earnings. And Culp Incorporated down 1 point. It's expecting to have lower earnings for the upcoming quarter. My street critique guest tonight is Mr. Stan Weinstein, editor and publisher of the widely followed professional tape reader Market Letter. To say today's market sell-off was anything less than horrendous would be to say that one day in 1945, temperatures were a little higher than normal in Hiroshima. I asked Stan Weinstein, what does it all mean? And where, in his opinion, will it all end?
Paul, as far as I'm concerned, the only thing you can call this is a crash. And what I've learned long ago, when you're in a crash sequence, you don't try and guess a bottom. And I also think that you have to get across, this didn't come out of the blue. A lot of people say this was a big surprise decline, but the truth is, you know, in late August, they turned negative technically. As far as I'm concerned, the indicators are weakening, and what we're getting now, first you had a Dow theory sell signal. When the market broke below 2450, it went below its 30-week moving average. You turned negative, and this is a negative phase that we're in, and the market is now panicking.
Well, there's no question about that, but, you know, you talk about support areas and all that. Those are all broken. What is this going to do to technical analysis?
Well, if anything, as far as I'm concerned, I think it strengthens the case for technical analysis, because the truth is it shows, well, so many people are saying this market's going to 3,000, 4,000. The technicals were weakening, and it pointed it up, that it was weakening. The second thing that it does is show that you have to have good tactics out there for investing, because if you listen to the indicators and you lightened up, and if you had stop losses on your stocks, you were taken out and you avoided this.
But as defensive as you were, you still liked a few selected blue chips, and they've gotten clobbered in this market.
Absolutely, but as I said, that's where the stop losses came in, because we lost those stocks in a hurry.
So you were protected.
Absolutely.
Now, what signs would you look for this thing to end?
Well, there's a couple of things. First, when you start to see that the market goes down, but fewer individual stocks are making new lows, the converse of what we had in August, that'll be a sign. But the other thing I really want to get across to people, Paul, I think before this ends, you're going to soon have a snapback, a very sharp technical rally, which may not be the real thing, but it could come back 200, 300 points. And what I want to stress is, just like when you stretch a rubber band, it snaps back, we're going to have a snapback rally, but I would not buy for it. I would sell into it for those people that are still too heavily invested.
But if everybody follows your advice, there won't be a snapback rally.
Happily, everybody doesn't follow any one person's advice.
All right, now, what do you blame the major source of the selling, let's say Friday and today on?
Okay, a lot of things. Number one, you have the weak technical condition. Then there's a lot of margin calls going out. So I think that certainly kicks in. The mutual fund redemptions are coming in here. The selling programs, you put it in together, and I think you end up with this kind of a terrible
Now, what
loss.
about these wonderful innovations that we've had over the last few years? Index programs, you know, futures-related things, and portfolio insurance. Wonderful innovations, except they turned right around and stabbed us in the back.
Absolutely. But people, you know, I've said it on your show, and not just now, I said it last year. I'm very negative on those automated sell programs. I think that there's potential for disaster. I said in there, except I underestimated. I said on the show that one day we'll be down 200 points. I was too conservative. Those programs are very scary things.
You think there'll be restrictions put on them?
I do believe, and I said that too. I said it'll never happen, Paul, until we have a bear market, until it exacerbates the downside move, and I think that's what's going to come out of this.
Do you think it's a good idea that the New York Stock Exchange opens as usual tomorrow?
Oh, I'm not only not a good, it's a good idea. I think it's imperative. When I hear people with rumors saying, we're going to try and help the market out by maybe closing it for a day or two, I think it would be the worst thing in the world. This thing has to be allowed to run its course. I think if they scared people by ever closing the exchange, that would be a disaster.
Stan, run its course. We're down nearly 1,000 points here from the you know, the peak. Hasn't it run its course?
Well, probably from a short-term point of view, I wouldn't be surprised in the next day or two if this thing does run its course and we get a very sharp snapback rally. But after that, I think that there's going to be a lot of base building because there's a lot of technical damage done, and we'll see how far it goes before it runs its course. I've learned to never guess the bottom.
All right, but when you see it, what groups will you buy? The blue chips again that were the leaders?
I have to wait and see the action. I don't want to look ahead of the thing.
But can you assure us that we will eventually come out of this?
Oh, come on, like night follows day. There's always another bull market after every bear market and vice versa.
Or in this case, let's hope day follows night.
Absolutely.
Stan Weinstein, the professional tape reader, thanks very much for being with us. That's our Wall Street wrap-up.
On the precious metals markets today, gold, platinum, and silver prices rose as stock prices plunged. On the New York currency markets, the dollar rallied late in the day to finish higher against the mark, yen, and Swiss franc as Treasury Secretary Baker and the West German government reaffirmed the G7 accord. The Canadian dollar fell against the greenback while the British pound gained. And oil prices rose early in the day on the Persian Gulf tensions, but then dropped sharply to close lower. In earlier London trading, prices ended higher. If President Reagan is concerned about today's stock market developments, he gave no hint of it at his only public appearance today. Speaking at the swearing-in of his new Commerce Secretary, C. William Verity, the president gave a glowing account of the economy's recent performance.
I believe that the birth of a truly global economy, such as we're seeing happen now, will mark the birth of a new age of peace. It's already marking a new era of opportunity. This month we'll set a record, the longest peacetime economic expansion on record.
Asked about the market's fall later in the day, the president told reporters there's nothing wrong with the economy.
The Reagan administration will soon have to deal with a new government in Japan, which may take a tougher stand on trade matters. As Tokyo correspondent Lucy Kraft reports, backroom negotiations by Japan's ruling party this morning resulted in the selection of the man who will become Japan's new prime minister next month.
Japan's next prime minister is 63-year-old Noboru Takesha, the son of a sake brewer, formerly head of the Japanese Construction and Finance Ministry.